Good morning, traders. It is Monday, January 15th, and the market is closed in observance of Martin Luther King Jr. It is a balmy minus 10 degrees outside, so let's heat things up by looking at our last pick. That's how I start all of these videos out. The only way for you to determine whether or not this systematic trading approach really works is for me to highlight stock picks that conform to the system and then to review them in the very next video. Hopefully you've gained enough confidence throughout all of my videos to start learning the system on your own. During my live event on Wednesday, we highlighted a number of stocks, but my pick of the day was Meta. I really like the way that the stock broke out through this horizontal resistance. You can see the strong uptrend. It's got earnings coming up in about, well, let's check, February 1st. So about 2 weeks, the company will release earnings. You can see how we had this nice steady price action on Wednesday. So let's go into the 15-minute chart so we can observe that. This is when we were doing the live event right in here. You can see how the stock continued to power higher. Had a little bit of a dip on Friday, but that's okay because the stock challenged all of these gains. You can see that even with the market pulling back on Thursday, the stock was still able to preserve most of the gains from Wednesday. That's a good sign. You can also see how the stock was able to rally up the entire remainder of the day and close very close to the high from Wednesday. So it's confirming if this was all fluff, the stock would have been pounded, pounded down, and it would have given all of these gains back. But buyers came in and supported the stock. And now on Friday, you can see how the stock actually closed above that high from Wednesday. I still like this pick. I think Meta is going to do very well over the course of the next couple of weeks into that earnings announcement. One of the things that I really want to focus on today is the concept of a spot within a spot within a spot. This is something that fishermen do, and I'm going to show you how we can do that within Option Stalker Pro. It makes it so easy to find the best stocks that are setting up during the course of the day. But first, let's backtrack and let's take a look at what the market is doing overall. You know from my previous videos, I am bullish. So we'll go into the daily chart and I'll explain why I'm bullish. In essence, this pullback that we saw August through October was very choppy. We saw nice big bounces with good duration that told me that buyers were engaged during that entire process. And then as soon as the lows were in and November kicked off, look at the strength of this rally. No pullbacks, hardly any red bars on the chart. And so we got a little bit of a dip here, which we were expecting to start the new year. There's a little bit of profit taking coming in. And that was instantly erased last week on Monday with this long green candle. Now you can also see how all of those gains from that day have been preserved and how we're testing the bid, and the market is rallying. Now, I viewed last week as a victory. Why? The market is right where it was when it closed 2023. Why was this week bullish? Well, we have the temptation to take profits after a big run like this. And so the market is going to be looking for reasons to sell, reasons to test that bid. Well, we had 2 of them this week, and I consider those bullets dodged. So we're currently long swing trades. We like our swing positions. We're expecting the market to digest gains for a few weeks. So we know we could take a little bit of heat on our longer term swing positions, but it's okay because our entry point has been fantastic. So we're going to let the market move around a little bit because we're expecting a new relative high. And I believe we're going to challenge the all-time high probably in the next week or 2. Yes, an all-time high. So this previous week, we had the CPI that came out. It was a little bit hotter than expected. And if you watched my videos from last week, I'd mentioned to you that the expectations for a light number were very, very high. That's part of the reason that the market has rallied so much, is because everyone's expecting inflation to come in low. Well, when the expectations are favorable for inflation dropping like that, it means that surprise favors the upside. It favors the hot side. And that's exactly what happened. Inflation didn't spike dramatically, but a 0.2% reading was expected, and we came in at 0.3%. Okay, the market shrugged it off. You had this initial sell off, and then the market rallied the entire day, and we finished with a bullish hammer. Okay, Friday, we had another bullet dodged. Well, what was that bullet? We had bank earnings coming out. So some of the largest banks, Citigroup, JP Morgan, were two of the big names that announced. And so banks have been rallying really, really hard, and there could have been some profit taking that we would have seen in those names. We're aware of this, and I already mentioned this in the last video. I felt that bank earnings would be excellent. I didn't think that they'd move much higher. I didn't think that they would move much lower. Good news is priced in, and right now, the Fed looks like they could possibly postpone cutting rates. So that's interest rates higher for longer. That's good for banks. That's how they make money. So the backdrop is good. The job backdrop is excellent. We've seen lots of good job growth. So banks should continue to do well because they're going to have very few bad loan write-downs when people are employed. So let's take a look at XLF because that's going to give us an idea of how bank stocks fared on Friday. And here we can see that they opened a little bit higher. This is the financial ETF, and they closed basically where they closed on Thursday. So bullet dodged. Let's go into the daily chart, and there you can see the strength that I had referenced in the financial sector. So good news is priced in. Any surprise on the earnings reaction would favor the downside because we've had such a big run up. But it didn't impact the market. Those stocks were able to preserve their gains. In the week ahead, we've got lots of banks announcing. So I'm going to go into custom search very quickly, and then we'll take a look at which companies are going to be announcing so that we can plan our trading week. Earnings date projected. So I'm going to mark that, and I'm going to go with 5 days. And for those of you who are on Option Stalker Pro, this is a feature that you will be able to use. And then I'm also increasing our option liquidity because we're interested in what the major companies would be that are announcing. And here we can see these are the companies that are going to announce this week. Alcoa, Ally, Bank. Discover Financial, Bank. Fifth Third, Bank. Goldman Sachs, Bank. Huntington Bank, Key. You can see these are all banks and financial institutions. So they are going to dominate the scene this week. We've also got a few energy stocks reporting here as well. Nothing to really drive the market. We've got a holiday shortened week. There are only 4 trading days. As far as the economic news that's going to be coming out, also very light. Retail sales, industrial production, those are not typically big market movers. So we don't have much to latch onto this week. And so the market should continue to digest these gains, and it's in a bit of a holding pattern, but with each passing day, this bid is confirmed, meaning that buyers are waiting for a dip, they're waiting for a dip, they're waiting for a dip. The first little dip that they got in the first 4 trading days of the year was instantly gobbled up in one day. Bye bye bye, bye bye bye, bye bye bye, bye bye bye. Closes on the high, and now we've been drifting higher again. This market is a pressure cooker, in my opinion. We are ready to blow the lid off of this thing. And this price action, this really strong price action from November through year end, tells me that buyers are engaged. So we've also got a bullish 1OP cycle. I'm looking for this breakout, so I'm going to be focusing on the bullish side. If you're day trading, I have been discouraging you from getting cute and trying to short this rally in here during this pullback. All that does is distract you because now you're trying to get cute, you're trying to time this little dip, and you're trading contra to the longer term uptrend. And what happens is that you start adding to some nice short positions that are working out fairly well, and then you get blindsided by this long green candle on Monday. I mentioned to you that the bounces are going to be fast and furious, and they'll come out of nowhere. This day, you can see we opened just above the close from Friday. Didn't look like anything big was going on, and then throughout the course of the day, tick, 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 we ticked higher, and by midday, it was apparent that there weren't any pullbacks, and the market just flew higher. So on a day like that, you are scrambling to cover your short positions and to take losses. And you might even think, well, this was just a one-off bounce. I'm not going to get too worried about the price action on one particular day, so I'm still going to hang on to my shorts. That would not have been a good premise to stay short anyway, because this is, in essence, a very long, bullish, engulfing candle that wipes out the entire first week of trading. This is bullish price action, folks. They test the bid, bullish hammer. Test the bid, bullish hammer. So most people would not consider this a true bullish hammer because the close was not higher than the open. But for me, as long as we are closing in the upper quadrant of the candle, that's the price action that I'm really looking for. I'm not as concerned about the close versus open of the candle or that it's red or green. I'm more interested in the fact that they tried to sell the market off and buyers came in and they supported it and the market was able to close near its high of the day. That to me is the important part of the candle. So yes, I think we're going to continue to float higher this week. The news is fairly light. We've dodged a couple of bullets that I mentioned. And here's the kicker. We are getting closer and closer to major earnings announcements, and in particular, the mega cap tech stocks. Those have been the stocks that have rallied the market. Shorts are going to be very, very nervous when we're within striking distance of an all-time high. So the SPY closed at 476.68 on Friday. 480 is an all-time high. We are one good trading day away from the all-time high. So when I tell you we're probably going to break the all-time high, I'm not going out on a limb. It's within striking distance right now. So we should expect that. And you can see how this was the high of the year, and we've been flirting with that. This is the high of the year from 2023. So the price action is very bullish. Stay long. Do not short. Do not look for any kind of massive correction in here. We are going higher. So as we get closer and closer to mega cap tech earnings, shorts are going to be more and more nervous. Who's going to want to short this market? Only a fool would try and pick a top here. So shorts are going to be nervous. Buyers are getting more and more aggressive because they've seen this compression. They haven't gotten the dip. And because they haven't gotten the dip, they need to step their bids up, which is exactly what happened in here. So they were hoping that this dip would start to materialize into something deeper. Nope, nothing doing. Rallied right back. Price action tells us that this is what we should have expected to happen. Why? Because there haven't been any dips along the way. We barely even had red candles in here during the entire November and December rally. That is a sign that buyers are super aggressive. Every time you get a red candle, gobble, gobble, gobble. They just gobble it right up. You get a red candle, they gobble it right up. They can't get enough. Every pullback is a buy. That's why we're going higher. So let's go find some really nice stocks, and let's go under the premise that we were trading this week. Let's say we're trading Thursday and Friday. We're trying to day trade some really, really strong stocks. How do we find them? Well, all of our searches are designed to find the best stocks. So when a stock comes up in green royal flush, and I'm going to focus on that particular search, you can see in almost all my videos, just an excellent search. So what does that search look for? Well, it looks for a buy signal using our proprietary buy signals on a 5-minute basis all the way up to a daily basis. So on every single time frame, the stock is on a buy signal. Okay, well, that's interesting. And we could see that there are lots of names in here. So the way that we can really zero in on the picks instantly is to use these custom column layouts. And so I'm going to go over the custom layout, and then we're going to take a look for some stock picks and see which stocks we would have been zeroing in on right away from the beginning of the day. So if I right click, I can go into edit columns, and here you can see all the variables that we have. So if you like to trade 3-8 crosses, 3 EMA versus 8 EMA, bullish or bearish, ADX, EVWAP-E, breakouts using our trend lines, buy sell signals, which I've already added, compression breakouts, lots of variables that you can be adding, HA continuations, LRSI, key bars, all of these variables, SMI, are available for you to put into the column. So what I've done and what I like to use is I like to have buy signals on a shorter time frame. So M15, M30, H1, D1, so that as I work from left to right, I know that the time frames are going from shorter time frame to longer time frame. Then you'll see that in the middle, I've kind of inserted this high of day, low of day. Why do I like this particular display setup? Because the high of day and low of day is going to tell me when a stock in the last 5 minutes has made a new high of the day or a new low of the day. Well, that's not going to happen constantly. And if it does, that's okay too, because those stocks will be highlighted. But for the most part, you're going to see that this column is empty. So my eye can instantly zero in on stocks that are making a new high of the day. And that also provides me with a natural buffer between the next set of fields that I like to look at, which is relative strength. We trade relative strength. So the stock also has real relative strength on a M5 basis, 15, 30, D1 basis. So again, working from left to right, shorter time frames to longer time frames. As we continue to go down, I like to know that the stock is above VWAP, which is this column right here. All right. Then I'm also looking for an outside day. Well, why would that be important to me? At very minimum, if I'm going to be trading a stock, its first resistance level is the prior day's high. I don't want anything in the way of my trade. I want blue skies ahead. So I need to have that prior day high out of the way. We need to be above it. Well, that is a minor breakout because we're above the prior day high. So outside day is also an important field for me. Then the remaining fields you'll see are all blue. These are not bullish or bearish because we're measuring volume. What's the volume like today? If I have a blue dot, that means that the volume for that specific time period is greater than 120% of the normal volume. And then the final field that I have is R volume. So based on what the normal 20-day average volume would be, how much of that volume has traded currently today? So a large value here would be good, and we can see on workday that is almost 1.8. So that is 80% above the 20-day average volume. Huh. Okay. So let's take this down now that you know how I have my fields configured. And I can go through any search. Again, these are fantastic searches. They are going to yield the best stocks. So that is the spot. Now we're looking for the spot within the spot. And as the trading day is unfolding, I'm going to be watching for which of these stocks are producing the most green dots and the most blue dots. That's exactly where I want to be focusing. So in the first half an hour, 45 minutes of trading, when you're really trying to find that strength, these searches are going to help you. So we come in on Friday, and we can see that we've got this gap up. Okay, so everybody gets excited. FOMO Joe gets excited. We've got a gap up. And then you can see how we have these wicks above the candles, and we have a bearish 1OP cross. Well, we don't want to be buying gaps up because we don't need to be chasing. The market is bumping up the high against the high from 2023. There's no reason for us to rush in and do anything right on the open, especially with this bearish 1OP cross. So now the market starts to come in. We get this long red candle. It's into the gap, and the market continues to reverse. We're below VWAP. No reason to do anything. We've got a bullish cross right in here. Okay, well, that's pretty interesting. We're still below VWAP. These are long, mixed, overlapping candles. So, yes, this would have been a decent point to maybe take a few starter long positions. This long red candle and this retest and this higher low double bottom, I liked, especially the way that we marched off of it. We could see that we're still in this bullish cycle, so this is where you would be adding to your long positions. And the way to find these initial positions is to go through and use these stock searches and then instantly start looking across the columns to see which stocks. So I've got a market that's pulling back. If I've got a stock that is on its high of the day and that is above the prior day's high, it's got green dots across the board, it's got blue dots and heavy volume, checkbox, 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 checkbox. I know this stock wants to move higher. It's got relative strength, and I have the support that I need in the overall market. So yes, midday, this is where you're looking to add to your long positions, and this is how we find those stocks. So let's click through a few of them. Now I'm on Pop Bull. It's okay, we can stay on Pop Bull. And we'll look at REGN to see what that's done. Hey, this is a nice bullish flag formation on a D1 basis with a breakout to a new relative high on good volume. We know that right in here. So not fantastic because our vol is about average, but we can see how in the remainder of the day, the stock actually did pick up a little bit of volume. So there's your volume early in the day. Stock gapped up. Didn't do much. And again, these dots are going to be representative of where the stock closed, so you can see that it did finish nicely. But early in the day, we're looking for a stock when the market is down that is just marching higher and oblivious to what the market is doing. That tells us that buyers are in there, and they're not just short-term day trading buyers. These are longer-term buyers. How do we know that? How can you be so sure? Because longer-term buyers don't care that the S&P 500 is drifting lower for the last 20 minutes or 30 minutes. They're looking out a year or two. They want to own this stock. That's how relative strength works. And instead of trading the S&P 500 where there's no edge for us, we use strong stocks as a surrogate long position for the S&P 500. so that if we get our timing off, this stock is going to continue to march higher. If the S&P 500 moves lower and we got the market wrong, we still have a chance to make money in that stock because we know from the price action the buyers are lined up. This is such an incredible edge. For those of you who are trading S&P 500, and I trade S&P 500 as well, I tend to trade S&P 500 on really big days when there is a macro move and a longer term breakdown and heavy volume, material news. Then I can get in and out of the market very quickly. But those are maybe 10, 15% of the overall days. I can find relative strength and relative weakness within the market every single day and work that edge. So please consider trading stocks. It's a much, much better vehicle. So Workday is another stock, and you can see Workday across every spectrum, very, very strong. Blue dots across the board. Green dots across the board. 1.8 in terms of RVOL. Look at that steady climb higher. So by midday, when you're taking a look at the market, you can see how, okay, market made a nice low here, got a bullish cross here, get a nice little bounce off of it. So yes, about 90 minutes into the open, we're starting to consider bullish trades, and then about 2.5 hours in, we start looking to add to those positions. Well, if you're looking at Workday, you can see how when the market, I know this because I've studied the S&P chart and I know basically what the market's been doing at all times. But so as you start to look at this, and if you're a seasoned trader, you'll realize that this pullback was the market retest. Well, look at how much higher the stock retest was than the low of the day. And we know that the market sold off like this, bounced a little bit, and then almost came back and retested the low. This stock was nowhere close to doing that. And we had the volume, and we had the relative strength. So let me put up SPY, and then you'll be able to see it in a different fashion. So there's the low of the SPY, the gray line. There's the new, the retest of the SPY, almost equal to that. And there in the stock, you can see how never even got close. So you buy here, you see that retest of the SPY, higher low double bottom, bullish 1OP cycle, stock making a much higher low, never pulled back like this, like the market did. Okay, I'm going to add to the position here. Workday continues to move higher. So that's how we do it. And you just go through these charts and start looking for all of these blue and green dots for a bullish trade. Here's a stock. I haven't gone through and looked at any of these, by the way. So let's take the SPY overlay off. And let's go in and take a look. Something else that I've added to the charts, which is pretty cool, is that you can go in and you can highlight heavy volume bars. So in this particular case, this is a heavy volume bullish bar, meaning that it closed above the open. And if I scroll back, you would see, well, there's a hot pink one right in there. That's what those will look like. If I scroll back, I'd have to scroll back quite a ways to find a hot pink one there. But in any event, you can determine how many periods back you want to go to calculate that volume spike and what magnitude you'd like to display. So if you feel that a 10% increase in volume is relevant, that's what it will display. If it's 150%, you're looking for that massive, massive volume. Okay, well, that's a pretty high threshold. You're not going to see many of them. So you can define the number of periods and you can define the percentage above the normal that you'd like to use. One thing that you should also realize is that this 5-minute bar is not comparing what the average volume has been for these 20 bars if I use a 20 period. What it's doing is it is comparing exactly this 5-minute bar to that exact bar for the last 20 days. So we are comparing apples with apples because the volume in the middle of the day is going to be much different than the volume at the beginning of the day. So that's an important distinction for you to know. So we just keep going across these charts and looking, and here's another PAA. And you can see how the stock gapped higher, made that low with the market, and then started to continue to grind higher and never look back. Didn't have quite the volume, so I had noticed a couple in here. This is nice, NXE, big volume here. You can see the gap up, pull back, and then it continues to run higher. So market dips, it preserves the open, which is nice. Market makes a higher low double bottom, so does the stock, and now the stock starts to grind higher. So it's preserved all these gains. These gains have been digested during a weak market. These gains have held. That's a good bullish sign. So let's go in and take a look at green royal flush. That's kind of where I was headed in the first place. And so I bring up this search early in the day and I'm looking for that strength. Where am I going to find it? And so we can see a number of stocks in here. Workday we've already looked at. Amgen, let's take a look at that. So Amgen gaps up, fills the gap. This is not a particularly great looking 5-minute chart for me. Okay, I don't like the fact that the stock gapped up and then it filled the entire gap. What I would like to see is gap up. With a weak market, you can come back and you can check that open right there, but I'd like it to hold. Ideally, get this gap up, and more than half of these gains are preserved when the market is doing that initial check. And then as soon as the market finds support, the stock is making a new high of the day. That's what I really, really, really want. Because if I see that on heavy volume and the D1 chart is showing me a big breakout, then I'm going to get really excited because I'm going to know that this stock is going to move much higher. Amgen, really nice breakout here through this high plus, closes on its high, and now it's continuing to grind higher when the market has done what? When the market has been pulling back, we've had a little profit taking. So I like Amgen on the D1 basis. I think this stock is going to continue to move higher. Earnings coming out February 6th, so there's still some time. So let's keep looking. Let's see what else we've got. Well, your stock pick of the day is going to be IBM. I love this pattern. You can see how there is a bullish flag formation. So Friday, when the market was pulling back, this stock was flagging on a number of different searches that we have. This is a nice little technical breakout. You can see how it's been able to digest all of these gains over the course of the last few weeks. And now buyers are back in, and the volume was heavy, and it's regained its relative strength. Lots of good things happening in the stock. So let's go in on a 5-minute basis. Look at that steady price action. So this is one of the stocks where you came in Friday morning, market's pulling back. Okay, we've established market support. We've got our bullish 1OP cross. We're about 90 minutes into trading. Now we're excited. Now we're really trying to find the best of the best. The searches are getting us into the spot. The column layouts that I've shown you are getting us to the spot within the spot. And IBM was one of the stocks that was highlighted very early on in the chat room. And you can see this nice breakout on this long green candle. When did that happen? Well, lo and behold, it happened right when the market was forming its low of the day. So yes, we've got a breakout to a new high. Stock never pulled back. So incredible relative strength. For many of you, it's easier to visualize this when you have the SPY overlay. SPY gaps up, massive pullback. Well, massive. It pulled back. Filled that gap. Stock continued to power higher. So now that you've got this low right here with the market and you're sensing that market support is starting to form and you know that you have a D1 market tailwind. The market has been strong since November. It's been super strong. We are looking for a new all-time high. We want to trade the long side. We know there's a little nervousness in the market. We know there's a little profit taking, a little bid check going on. So we let the market do its thing. It finds support, and then we find the best stocks. So now you get this second little wave. So that's where you enter your position initially. Market lifts off, stock lifts off. You're feeling pretty good. Okay, yeah, stock's continuing to move higher. This is the big tell. Market pulls back and has that second dip. IBM barely even pulled back. Barely pulled back. So if I'm long here, I'm already making money on the trade. I see that the market is pulling back and testing this. I'm waiting for that higher low double bottom to confirm that the market is ready to go higher. And now I've got that confirmation. I'm adding to this position right here. Market starts to grind higher. Ooh, awesome. Now we have a new high of the day, and the stock is continuing to go up. Uh-oh, uh-oh, uh-oh. Compression right in here. Market is looking like it's going to roll over. Well, let's go into that M5 chart. And so right in here, you're looking at this and you're going, I don't know. The S&P have got this bearish 10P cross. I know I got to be careful when I got these bearish 10P crosses. So maybe I should just take gains on IBM. Now that wouldn't be a fatal mistake, but it's really not what you should do because you have this level of strength right in here. Stock continues to make a new high of the day. So you're cognizant of the fact that the SPY is going to have a moment of weakness. And mentally, you need to prepare for it. Okay, our stock just made a new high. What am I looking to happen while we go through this bearish 10P cycle on SPY? What do I want to see happen? What keeps me in the trade? So for me personally, you're getting this nice key bar. You can see it's hollow. I would like to see the open of that key bar preserved. I could also lean on this previous high of the day right in here. So as long as that support holds, I'm willing to accept a small pullback because the stock has done absolutely nothing but grind higher the entire day. Pete, how do I know when to take profits? I always get out of my trades too early, and sometimes I hang on to my losers too long. Everything that you used to get into the trade still applies when you're exiting the trade. If everything is still intact, then you prepare yourself mentally and you know exactly how much of a pullback you're willing to withstand. And as long as the bid is preserved, you know that buyers are in there. They've been there all day long. They didn't care about that market sell-off. They didn't care about that market sell-off. Why are they all of a sudden going to worry about that market sell-off? And the stock could have a moment of weakness. The stock could roll over, and I'm willing to exit here because I've got really nice profits in the trade. But if I can hold the line, and now all of a sudden I start to see, hey, the market is pulling back in here. Look at that pretty big pullback. What's the stock doing? It is preserving its bid. It is not pulling back at all. All right. I might even choose to add a little bit right in here. Once I start seeing 10P bottom out and I get a nice long green candle off of that low, I could even add into the last hour of trading. And because I've already learned that this stock has been floating higher when the market's down. Buyers are in there. Look at this freaking volume. These are the tells. This is the process that you go through. And so you don't have to worry that, oh my gosh, I'm in this trade and I'm getting a bearish 1OP cycle. So let me make a distinction. Not every stock on Friday looked like this. I can show you lots of stocks that ran up and that started to show some signs of weakness right in here. So when the market is drifting higher, you're seeing some long red candles in here, some profit taking. Okay, that's a sign that as this bullish 1OP cycle runs, I should probably be looking to take gains in those stocks if I'm day trading. And we can go through the list and take a look at a few of these. Now, these are all going to be really strong stocks because of the nature of the search. And this would be a good example right in here. So let's say that I am in Meta and the stock looks good early in the day. Look at it power higher. I love this, by the way. And then on the retest, this is really nice relative strength. It was oblivious to this bid check during the first part of the day. But then all of a sudden on this second wave of selling when the market retested the low, that is a pretty big pullback. Okay, I still like the market, have a higher low. It's been able to preserve most of the gains for the day. So this is bigger than I wanted. I'm not adding to the position. I'm happy I'm in the position. Didn't expect it to pull back quite like that. Now I'm getting a bullish market right in here, and I should have a nice rally in the underlying stock. But as this really bullish price action unfolds, look at this stock compress. It should have gone higher with the market. So now I'm kind of on thin ice. I'm looking to take gains on the stock, and I can see, okay, now we're getting the market peaking out here. Stock has made a little marginal new high relative to this high. Compress, compress, compress. Now I see that we're getting a 1OP bearish cross in a market that's just been kind of choppy and hasn't gone anywhere. Right in here for Meta, yeah, I'm going to take my gains. Listen, I had a nice trade in here. The stock looks like it's starting to soften up a little bit. It pulled back more than I wanted to off of the high during this little retest, and this was the tell right in here. When the market rallied up, what did I expect the stock to do? And I mentioned this to you just a few minutes ago. I'm willing to weather this little pullback, but what are my expectations? My expectations are that the stock can retrace a little bit. There's a little bit of an upward trend line in here. I'd like to have that preserved. I can use VWAP as a guide also. I'd like to have that VWAP preserved. Oh, it didn't preserve the VWAP. It pulled below it. I didn't really like that. Am I panicking? No. Market just made a higher low. But now all of a sudden, I'm thinking differently about this stock. And now, okay, you pulled back more than I wanted you to. On this market rally, you better march, 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 right up to a new high of the day. It didn't do that. It barely had any lift off of the VWAP. And now later in the day, when I'm getting a bearish 1OP cycle, yeah, it's time. This stock has run its course as far as a day trade. I've already showed you on a D1 basis, I like Meta. I think Meta is going to continue to move higher into its earnings announcement. We never hold over earnings, so do not make that mistake. All we need is a little positive market tailwind to fuel Meta higher. And I think we're going to get it with each passing day. We get closer to those mega cap tech earnings, we should start seeing the market move higher. So that's how you trade. That's the notion of a spot within a spot. That's how we use our column layouts to very quickly identify the best of the best. The searches get the best stocks on our radar, and then the column layouts tell us exactly where we should zero in. I could take a look at a couple of other stocks here and see if we had any others with lots of dots across the board. GILD, that was nice. You can see how that stock finished on its high of the day. EDU, a little bit choppy. I'm not into stocks that make that level of retracement. I like nice, steady price action. CPNG, you can tell this stock is volatile just because of moves like that. Just going to click through and see if there's anything else. DocuSign, this is actually in a little bit of a bidding war. So without question, IBM is your pick of the day, but I also like this WDAY chart. This one also looked really good. So keep that one on your radar as well. That's all I've got for you today. IBM is your pick. I believe this stock is going to continue to power higher. I love that bullish flag formation. Look at this power on Friday. Okay, these buyers are not going to go away Tuesday when the market opens. So any kind of pullback on IBM should be a buying opportunity for you. You can see that heavy volume. They're likely to be around Tuesday morning. So consider yourself lucky if you get a pullback on a stock like IBM. If the market opens higher, IBM is likely to open higher and to continue this move. Do not chase, especially don't chase any big gaps up. Be patient. You'll get your chance to enter IBM, and the stock should be able to add to this breakout right in here. So good luck with your trading. Watch for that live event on Wednesday. We'll be conducting it about 2.5 hours after the open. Lots of lessons. Please post your questions. We also try and address all your questions during these live events, so it's a great learning experience. Thanks so much, everyone. We'll see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.